U.S. stocks pulling back this morning after the S&P 500 hit a new record high, the third of the year. Scott Chronert of Citi warning the near-term high is likely due for a pullback, but he does add there's no change to the long-term outlook. Here to break it all down is our very own Josh Schafer. And Josh, I can't wait to get your thoughts on this note because I thought it was kind of interesting. He sounded like Jay Powell to me, like leaving himself open to potential rally, potential move to the downside, not sure where the market is heading.
Yeah, it seemed like what Chronert was highlighting to me is essentially a lot of the good news in terms of Trump policy feels like it's priced in at this point, and especially in terms of tariffs, right? And I think a lot of people I've been speaking with recently have sort of had this thought where it seems like the market at this point has priced in that 25% tariffs on Mexico and Canada are largely negotiating tools. So the fear would be, what if they're not a negotiating tool, right? And what if those tariffs actually do come to fruition in the next couple of weeks? I think we saw perhaps the last time we got near the tariff deadline at the beginning of February, right? We had sort of that overnight sell-off. We'll call it a sell-off. Stocks were down about 1%. But for us in this market, a little bit of a sell-off, right? But then that sort of faded as the day went on, right? And we found out that the tariffs were getting delayed in Mexico and then the tariffs were getting delayed in Canada. So it seems like what Chronert is essentially saying here is the upside surprise is probably already priced in, and really you probably only have downside surprises to come in terms of tariffs if we do actually get full tariffs. But as you point out, Maddie, I think overall the takeaway also being he thinks that doesn't necessarily mean that the S&P 500 would be in trouble for the entire year, more so talking about perhaps a short-term drawdown.
Yeah, and I think a lot of this just points to so much uncertainty that's out there. And one of the things that we've been talking about, obviously a theme, and it was also a theme in a recent survey of CEOs and business leaders, just in terms of the fact that they are maybe a little bit worried about what the future could bring, but they are overall optimistic, which I found a bit perplexing, just given some of the headlines and given the fact of the lack of deal activity, for example, since the start of the year, would make you think that maybe they weren't as optimistic as they
Yeah, so the Conference Board survey of CEOs was out this morning, Shauna, and it hit its highest level. The overall index hit its highest level in 3 years. Pretty large jump you're seeing on your screen there all the way to the right. And what was sort of driving that, it seemed like, was, again, as you said, optimism on the current economic outlook, optimism on the next 6 months, which I found rather interesting, that they think the next 6 months is actually going to be better. I don't know if a lot of economists think the next 6 months is necessarily going to be better, perhaps maybe the same and not worse. But other key takeaways from that for me were sort of the overall employment situation that was highlighted in there, more signs of kind of the low hire, low fire environment. A lot of CEOs plan to hold on to their workers, which is good news for all of us that have jobs, right? And as Jay Powell said, it's a good environment where you have a job, right? And CEOs are planning to also raise wages for those workers, but they're not planning to hire. Less CEOs saying that they're planning to hire in the next year overall. So it seems like, again, kind of steady state right now. But again, I would sort of say the bad cut here would be if they felt like they were going to be firing people, right, or laying off workers or cutting back on the workforce, and they're not. So I think overall a positive spin from CEOs, which is a little bit different than what we've been seeing from consumer sentiment.
And a lack of hiring is tough when you have a record-breaking layoff happening to the federal government and the impact that could potentially have. I do want to switch gears a little and talk to you about this line. Chronert saying the Magnificent Seven will contribute but not lead the market gains. What is the leader then? Is it a specific sector or is it just general individual stocks keeping us afloat?
I mean, it seems like we'll go, if it's not the Magnificent Seven, it's definitely the 493, right? Within the 493, I mean, a lot of strategists right now are still talking about financials. They seem to like financials, right? If you're going to stay in tech, that AI software trade has also been doing very well to start the year, and that's been an area of the market that strategists seem to like. But Maddie, to Chronert's point, I think, again, what he's getting at with, if we have less Mag 7 contribution, it's going to be a different ride up than what you've had the last 2 years. You got the rally of over 20% for 2 years in a row because these giant stocks were contributing a lot to the S&P 500's gains. I know our Shauna Smith highlighted yesterday in her chart of the day, those companies are not contributing as much, right? And so if you don't have as big of a contribution to the index from the Mag 7, you get a little bit of a smaller gain, right? We don't have NVIDIA driving up this index right now.
Yeah, which I think is so interesting. And then that also begs the question whether or not market breadth is good for the the market, it's bad for the market. There are some contrarian takes out there that are starting to emerge, and just talking about the fact that it's going to limit some of that upside, just given the fact that it won't have that outsized impact as big tech.
It depends on what you own, right? It's good if you're a stock picker, right? And that's why strategists love to talk about it, because they love to be stock pickers. Yeah. And there are more companies, as we've been highlighting this week, there's almost half of the index is outperforming the index thus far this year. So there's more opportunity if you're going outside of just the Mag 7 to find a company that's going to do better than the index. So if you're looking to be that kind of investor, it's perhaps, if nothing else, just a more entertaining market to be an investor in. You don't just have to own 7 stocks and say, well, I don't know where else to go. There's other opportunities within the market.
Could make it a little bit more challenging
yes.
to find those winners.
It's not easy to stock pick.
All right, Josh, thanks so much.